Since the early days of crypto, and in particular the fall of Mt. Gox, one of the questions has been, how do we keep our crypto safe? The issue of secure custody is absolutely vital to our industry. And fortunately, we have a group of people here today that are going to walk us through what is happening at the next frontier of the capital markets and how we are going to deal with this issue. And if they are ready to go, I'm going to welcome to the stage. He's going to run, not walk. He is well known to many of you in Hong Kong, Brian Tang, right now the executive founder of the Light Labs at the University of Hong Kong. He is going to be joined up here by Raagulan Pathy. Raagulan Pathy is the Vice President, Asia Pacific with Circle. Here they come. All right. Nope, these are still the guys setting up. That's fine. After Raagulan Pathy comes up, we are going to welcome another Andrew because we can't get enough of the Andrews. He is Andrew Lilartipin, and he is the general manager with Ledger, another giant in the custodial space, everything about wallets they know. Steve Bowman is going to be joining us, managing director Asia Pacific for BitGo, and bookending this entire session. Come on, Brian, don't be shy, bring your gang up. Bookending the session, we're going to welcome Amy Tong, who is the Vice President Sales Asia Pacific for Fireblocks. Let's hear it for your panel. Bring it on. Come on, you guys. There we go. Go get them, Brian. Here they are. One more time, it's Amy Tong, Steve Bowman, Andrew Lilartipin, and Mr. Pathy. Take it away, Brian.
We're matching our faces. In case you can't recognize us, you know, post-COVID haircuts and everything. So thank you very much, Andrew, for the wonderful introduction, and thank you very much for all of you being here. You know, my name is Brian Tang. I'm really pleased to actually be and honored to be moderating this panel of you know, crypto unicorns, right? So firstly, you know, these companies are hugely competitive, they're hugely innovative, and they want to create more trust in the ecosystem. Hence, we're really talking about the next frontier of capital markets. So maybe if I can ask each of you to briefly introduce yourselves, your organization, your role, and then just one sentence to describe your vision of the role of blockchain that will play in the next frontier of capital markets. So, Rag?
Yeah, hi everyone. My name is Raagulan Pathy. I'm the Vice President for Asia Pacific for Circle. Most people know Circle for USDC. That's probably our most our biggest product. One sentence for capital markets and blockchain. I think allowing money to move freely on the internet at internet speed is really the ultimate holy grail for blockchain. And ultimately why it came up. You know, it's an internet-based protocol or technology that happens to underpin a lot of money and asset value. So for me, it's just moving money at internet speed.
Awesome. Thanks so much. Andrew.
Thank you. Thank you, Brian. Andrew Lilartipin. I'm the general manager at Ledger. I'm responsible for the enterprise business in APAC. So I guess Ledger is, you know, works with a wide variety of institutions, you know, exchanges, custodians, hedge funds, family offices, etc., to provide like enterprise-grade security solutions for digital assets. One word for...
One sentence.
Okay, one sentence, capital markets. I think, like, you know, for me, it's, I guess it's like that freedom of money, right? Because, like, you know, we see today, like, you know, there is a lot of unbanked people in this world, and just to be able to give them that freedom of money, that's me in 2 or 3 sentences.
Great. Thanks so very much. Next up, Amy.
Well, good morning, everyone. I will try to be a little loud because the lovely lady next door is really shouting here. So thank you everyone for joining us. My name is Amy. I run sales for Fireblocks. Here in APAC, Fireblocks provides secure wallet infrastructures for over 1,800 customers, starting from your 2 men and women in a garage running a small hedge fund trading, all the way to some of the largest custodians in the world, like Bank of New York Mellon and National Australia Bank. We do service them across the multiple use cases. And, you know, one sentence, what I think blockchain can do for financial markets is probably around automation, right? I think we talk a lot about digital assets, on the blockchain that could be programmable, that could be shared and viewed and have more transparency. These type of benefits could allow capital markets to be more efficient and generate a lot more new revenue opportunities that all of us are super excited about today.
Awesome. Thanks so much, Amy. Last but not least, Steve.
Hi, good morning, everyone. I'm Steve Bowman. I'm the Managing Director and Head of Asia Pacific at BitGo, currently based in Singapore. A little bit about BitGo. We've been around for 10 years. Most people out here know us for our wallets as a service, as well as our qualified custody products, but that's not all we do. We also allow people access to borrowing, lending, staking, and trading, all from the comfort of qualified custody, in addition to some other things such as loan servicing, collateral management, even professional services, which is our consulting arm. Simply put, we're the all-rounder on the pitch, and that's why we've had product market fit with institutions around the globe for 10 years. As to one sentence, I would say it's disintermediation is coming. If you are an entity that exists solely to take a toll from society and only to take a toll from society, blockchain is going to be removing you from that post, and rightfully so.
So from my meeting with Steve, I've learned he has got some of the best pithy kind of quotable quotes there. So thanks so much, guys. Now, custody really is one of the essential differentiators between Web 2 and Web 3, right? And I think a lot of us came from TradeFi. So I came from Credit Suisse, so it's been a weird couple of weeks, right? But often I think custody is not fully understood by the ecosystem, right? So maybe Steve, can you please help outline kind of the different kind of roles that custody can play in Web 3, especially for those that don't fully appreciate its role?
Absolutely. So let's first start with the word custody, because words have meanings. What I mean by that is this. You can't just go out and call yourself a champagne, right? If you're not made in the Champagne region of France, you're a sparkling wine. And there's reasons for that. And one of the unfortunate things currently in the crypto ecosystem is that the word custody is thrown around like confetti at a 5-year-old birthday party. And like words that have meanings, there are consequences on the back of that. So let's start here. What is a custodian just in the traditional sense? It means you pay someone money to hold your stuff, whatever that may be, gold, bonds, stocks, and they safeguard it for you, okay? Well, in crypto, there are a lot of marketing practices that have the word custody, custodial, or custodian, where they're doing none of that for you. What I mean by that is, if you are an actual qualified custodian like BitGo, that means something. Now, let me explain what that means. It means basically 3 things. 1, you have a fiduciary duty to your customers. 2, you keep assets in a segregated, non-commingled manner. And number 3, you undergo the prostate exam of regulation, licensing, audits, and all of those fun things, because you need to show that your protocols are up to snuff when it comes to theft, loss, or misuse. Further to that, qualified custodians like BitGo offer other added benefits such as insurance, bankruptcy remoteness, backup keys, all of these things that help safeguard your assets. Because the reality is this: when it comes to holding people's assets, you can't fake it till you make it. You have to have a seriousness of purpose, a seriousness of intent, and that means doing all these things that BitGo spent the past 10 years building.
Great. Thanks so much. Again, coming from TradeFi, custodians, trustees, there's an understanding there in terms of centralization and stability and of that structure. But again, I think in the crypto world, there's also the concept of self-custody, right? So maybe Andrew, Ledger, perhaps you could shed some light there in terms of who are the main users for that and the main use cases as opposed to what some of what has been described by Steve?
Yeah, no, sure, no. I mean, self-custody is a critical component in consumer protection in terms of minimizing risks in digital assets, right? So at Ledger, we understand the importance of self-custody and that the need for consumer protection in this regard. I guess the challenge is as a consumer in Web3, you don't necessarily know the parties that you're dealing with, right? Who you're transacting with, and that is something that's, I guess, critically important to understand. And so I guess what we did, or what we launched last year was a consumer protection campaign, right? So essentially, like, there's four sort of things that you need to focus on. The first thing is, do they, do they have enterprise grade custody solutions? So do they manage assets on a cold wallet? Do they manage assets on software? Is it on a Nano, for example? Or do they actually invest in full enterprise grade security for the sort of market participants or for that market need that they want? So that's one. And then I guess two was that, the topic of self-custody, right? So self-custody is essentially like, holding those assets for yourself, right? And that is a big differentiator from Web 2 to now Web 3. And this education is your, are you interacting with people who are practicing self-custody? Are you teaching self-custody to your audience, right? So that's the sort of second point. I guess the third point is around governance, right? So like, do they have the proper governance structures in place? And then I guess thirdly is transparency, right? So I guess what we've seen with FTX in terms of like proof of reserves and stuff, like, are they being transparent in what they're offering to you? That sort of builds like trust with the user base.
Okay, great. Thanks for that. So we didn't plan this, but Amy's sitting in between the two gentlemen, and Fireblocks offers both, right? But I think a lot of who you work with are financial institutions, and you do a lot of work, especially in the stablecoin space.
Sure.
So maybe you can shed some light in terms of how financial institutions and stablecoins think about the custody aspects.
Sure, absolutely. We definitely only offer self-custody for everybody who is maybe questioning. And the reality of why we're working a lot of financial institution is, if you think about the concept of qualified custodian, it's actually a very American-centric concept. And because of that, in the traditional market, the U.S. equities market is the largest market. So you get these flows of every single other custodian sub-custody their assets out with a American custodian, which is the common practice, the traditional markets. When it comes to the world of digital asset, there is no one country, one region that ultimately governs the issuance, the management of Bitcoin, as an example. So a lot of traditional custodians in local markets look at this as a great opportunity for them to self-custody as a licensed custodian, use our technology to build a set of use cases on top so that they can then service their end customers without relying on another, let's say, other country's custodian to support their growth. Specifically, when it comes to stablecoins, we're seeing a lot of local commercial bank, institutional banks launching their own stablecoins using our technology to support that growth, right? And a couple examples of that, actually, Australia is very forward in rolling these type of engagements out. We support both ANZ and National Australia Bank to do their own stablecoins. And the benefit is really twofold. One is around cross-border. So let's say you're a very large bank who's got 15 different subsidiaries under your umbrella. You want to offer a very efficient cross-border experience for your multinational corporate businesses. With stablecoins, you can issue multi-currencies and use smart contract to manage the FX between these currencies to allow efficient settlement. Or another example of that would be, let's say you want to do tokenization of real-world assets, and you recognize that money moves too slow for you to truly get the benefit of tokenizing of securities. So phase one of what you want to do is usually a stablecoin. So you solve the money-like problem, and then phase two, phase three, it could be the actual securities, which is carbon credits, bonds, equities, etc. So those type of use cases we'll be seeing a lot with the stablecoins around the world.
Okay, great. So sorry I misspoke, but
No, it's okay.
No, but
I still want the regulators coming, knocking on our door tomorrow.
I bummed up that, so I misspoke. But no, I think that's an interesting use case of, again, it's established, incumbent financial institutions now using this technology, right?
Sure.
And in fact, in some ways using the trust, but also sometimes even the licensing that they actually have, back to the point mentioned earlier on. Now, here next, I wanted to ask the esteemed panelists here in relation to mainstreaming of crypto adoption and use cases, right? So you've heard some initial thoughts there. Of course, the great thing is there's talk about in-store use versus retail. Rag, would love to hear your thoughts because again, Circle's been very focused, especially on wallet adoption. Love to hear your thoughts on what you think are the main uses of these wallets.
Yeah, absolutely. So firstly, I think we in crypto have this habit of going very deep inside, custody and all these other bits. And we're really kind of in some ways missing a trick because at the moment there's probably 100 to 200 million users of crypto in the world. But for example, there's probably 3 to 5 billion people that hold the US dollar, as an example. Facebook Meta, as a company alone, has 3 billion users across its sort of 3 major platforms, WhatsApp, Instagram, and Facebook. So one of the main things that I'm focused on is like, how do we take crypto from this like very crypto-centric view towards the mass public, right? And we could do all the things in the world in terms of having the right products and the right custody and everything else. But if we don't make the usability of it available to the general public, I think we've done a disservice. And I think that's the biggest challenge that crypto is facing now. How do we make this technology readily available for the average person? And the reality is that, my personal view is like the average person, it's too complex to do self-custody. To be honest with you, even the exchanges are too complex for the average person to use. We really need, whether you call it Web2 companies or whether it's new startups, to innovate simplicity so that the average person can come and use crypto and they don't even know they're using crypto. They're getting all the underlying technological benefits of crypto, which is that, it's global, you can move money, you can have surety that something's custodied and something's non-fungible. But they should come onto it and use it, and it should feel just like as simple as using WhatsApp or WeChat or Telegram, right? And I think that to me is the holy grail that we're hoping, for example, USDC can play a big part in enabling in terms of putting digital dollars in the hands of people. But I think we all, as an industry, have a role to play in terms of making crypto not like this buzzword that like only a small, portion of people, if they're really into it, can actually understand. My hope is that in a few years' time, not that far away, maybe in 2 or 3 years' time, that every person will have 3, 5, maybe 7 or 8 wallets, similar to how they have 3, 5, 7 or 8 bank cards or credit cards, and they don't really even know. Like it's embedded within their app, and they're using crypto and they don't really even know it's crypto. They just see the benefits of crypto. And I think that's where, as an industry, we have to move towards, obviously working with some of these key clients and partners, but we have to deliver that experience to the end consumer so that it scales way, way beyond the 100, 200 million people that are using crypto today, well into the billions. And I think that acceleration point can happen, and there's a lot of technology that's coming to the fore right now, but we really have to think about it as an industry as to how we're going to make that happen as well.
Thanks so much for that. So because, of course, you talk about the digital dollar, it's about payments, I think, from your perspective. So to explore that a little bit further, is it about cross-border payments, or is it about finally using it to buy pizza?
Honestly, it's payments, but it's also holding economic value, right? Like we underestimate how hard it is for people to open a bank account. In a lot of, if you live in Singapore or Hong Kong, that's pretty straightforward for most people if you're a resident there. But you only have to go out into other parts of emerging Asia, or definitely into Africa or LATAM, to realize that it's very hard to open bank accounts. It's easy to open wallets, like, with a super app, but it's very hard to open bank accounts. It's very hard to hold US dollars, right? Or other steady currencies or assets. And so I think, for us, we see a lot of use cases certainly around payments, using US dollars as sort of like the main currency of exchange. But we also see a big demand for people wanting to hold dollars itself because they don't trust their currency. They find it a way to hold it outside of the banking system. I mean, the easiest analogy is like the other day I had to send some money to a colleague in Taiwan, and I sent her money from marketing to buy something. I reached her bank account, And because of like the name was spelt wrong, we caught up in like this 10, 15-day process to get that payment through. And I'm like, firstly, she's like, why didn't you send me USDC? But that's a different topic. But you know, this is the pain. Like even in two modern economies, two people sending money between each other is a painful experience, right? It's completely ridiculous considering how much technology we have, and it shouldn't be that painful. And that's really what we're trying to ease. It should be almost instantaneous between anyone who can spin up a wallet and load up USDC or other stablecoins or other assets within there and send it to anyone anywhere in the world instantaneously.
Great. No, thanks for that. So Andrew, what about yourself? I think you think that NFTs actually play a significant role here.
I mean, I definitely think NFTs have the ability to become mainstream. I just wanted to add on what Rags was saying, right? Like, you know, most of us on this panel here are based in Singapore, and like he said, it's very easy to open a bank account in Singapore. But if you just look to our neighbors, right, there's such a big unbanked population there. And if if crypto adoption is able to sort of like facilitate that ability for payments, so it could be cross-border payments, but it is really just payments for goods and services as well. I think that's going to take it a long way to becoming mainstream. And also to Rags' point, we do talk a lot about the underlying technology, but that is obviously that has to be built, right? And then at some point, then there becomes the layers, the layers that are seamless to everyone else, right? But that is when that mainstream adoption becomes. But before that, we kind of need to build this. We need to build this tech, right? So like things like secure custody, self-custody, etc. We need to have that now, right? Yeah.
Okay, great, thanks. So what about yourself, Amy and Steve? In the capital markets theme, one of the hopes had been around tokenization. So either of you want to take that in terms of you think tokenization is one of the roles in which crypto can get more mainstream adoption, especially in capital markets?
I think on our end, I look at things like what will actually be the benefit and what problem are you trying to address? And actually, if you look at within capital markets, not all securities require the same level innovation, right? So you look at something like an equities market, it's got pretty good, robust settlement infrastructure in place already. Sure, it's T+2 in most countries, but the trading system, the net settlement basis, and a lot of the flow is relatively new in the last 10, 15 years. And that infrastructure probably is not most likely will be disrupted with blockchain technology on day one. Versus if you look at some other more illiquid, more complex instrument that typically have T+30-day settlement due to the back-end requirement, the auditing, or things like, for example, OTC derivatives, where even till today require two banks to confirm the net settlement basis across each other. These type of use cases are primed to utilize blockchain as a way to automate the settlement, to automate the transparency, and also to build that infrastructure together. I would say another example where we're seeing capital markets have a lot of adoption of blockchain is net new product, where they don't have same legacy infrastructure debt. So think like carbon credit is a really great example of that, where large institutions feel quite comfortable to innovate and experiment blockchain in that asset class, knowing the fact that they're not required to integrate this brand new shiny solution to the hundreds backend system that they may or may not have, in their offices. So these kind of the things we're seeing in capital markets, and really every jurisdiction, every region is very different in their approach and adoption. And I'm super excited to see what comes next in APAC.
Yes, no, it's great thought there. I mean, we've actually done a bit of work with carbon exchanges, right? Again, it blends into that space that you talk about. Steve, did you have something?
Yeah, just to round out this question, when we think of tokenization, the easiest wins are probably going to be any asset that's either illiquid or immovable. Classic example, you're a pension fund in Japan, you're long a portfolio of 50 billion real infrastructure assets, ports, airports, power plants, and one day you wake up and say, you know what, I don't want to be long a bunch of power plants. Well, good luck finding someone that's going to pony up minimum 100 mil on due diligence, spend 18 months of their time to find out if you even have the right licenses and approvals to operate said power plant. And then, of course, someone who has a cheeky 5 billion out the back that they want to spend on your power plant. As a result, those use cases are ripe for tokenization, and we look forward to it.
Awesome. So the next segment here, I created a couple of what I call little rapid fire sessions. So I haven't allocated who's going to be answering. So I told them, please put up your hand if you'd like to kind of take it up. So the first one was around, FTX. What else, right? No, but with FTX, increasingly, there's a focus now on calls for proof of reserve. So what do you think is the role of custodians in that space?
Yeah, sure. I love how everyone just kind of looked down the row.
I mean, like, who's the custodian here?
That's for Steve. Look, I'll first start by saying if there's a single regulator in this room, the answer key is in front of your eyes. You had FTX blow up. What was the one entity globally where people got their money back and they got it back in a timely manner? FTX Japan. Now, why is that? It's because Japan is one of the countries that has their house in order and has very clear rules about separating the exchange from the assets. Very similar to what you find in a lot of traditional finance, which we've known about for 83 years since the Investment Advisors Act of 1940. So, if there's one takeaway I'd like anyone in here who comes from a regulatory bent to take away, it's the answer is just up the road. Because the people that were able to operate with FTX Japan under that regime were protected. So I think that when we then move to the second part of the question about proof of reserves, look, the obvious question then becomes, well, what's your proof of liabilities, right? I think that many people view proof of reserves as a bit of a comfort blanket, but that's all it really is. Without knowing the other side of the ledger, it's not as applicable. But again, over time, I think that people will recognize this and that regulators, if they're on top of the ball, will start to implement structures like this because, again, if I could hammer this point one more time, the answer key is out there. It's what happened in Japan. Take notes, copy, co-opt, and make the ecosystem better because of it.
So I think I want to add a little bit there as well. I think a lot of time people look to custodians to solve fraudulent activities. Like custodians can't prevent just pure fraud. And more importantly, from a trader mentality, even if you get your capital back, that delay in the time required from clearance, settlement, bankruptcy court, all of these nuances is loss of opportunity from a market maker trading perspective. Sure, you're getting your full capital back, thank God, right? But that delay of 6 months time where you're unable to generate any revenue on your balance sheet is a huge cost for them as well. So a lot of times post FTX, what we've seen from all the large exchanges beyond just doing proof of reserve and proof of capital and proof of liability is this willingness to work with large hedge funds, large prop shops to figure out a way to maybe leave some of these assets away from the exchange control, do a non-custodial off-exchange solution back into the funds wallets themselves and find connectivity from their perspective to the exchange such that in the event where you're facing exchange fraudulent risk, exchange operational risk, not only will you be able to get your money back, you'll be able to get your money back in an automated, efficient, and a fast fashion. And these are the things that, Fireblocks is trying to engage with the rest of the industry to build. And the key thing really is previous to FTX, I would say the big exchanges really were not as invested because if you look at how the industry have developed, the exchanges typically hold all the powers, right? They're centralized, they're the largest deposits of the in every other sense. So what we've seen now post FTX is because these exchanges are all trying to compete for market share now, they're really trying to work with the customers to figure out a solution that allows both sides to feel confident in the outcome of mismanagement in either side, I should say.
Okay, great. Thanks. Now, competition. I want to deal with competition because NASDAQ just announced they're getting into the custodian space, right? And they're following a lot of the trade FIs like Fidelity and ISIS Back and the like. So all of you are natives, right?
Right.
But you do have trade FI as some of your backers. So right, we're in both spaces. So who do you think is the fiercest competitors in this space? Maybe you do a quick one.
My view is that competition's really good because it provides a point of validation, especially when you get traditional players like NASDAQ coming into the space, maybe the CME in the future and others, because it just gives validation to what the industry has been saying is really important all this time. It also lifts everyone to a higher standard, frankly, as well. So I think, I don't think, speaking on behalf of everyone, I don't think anyone's worried about more competition. I think the industry, the opportunity to grow the industry is far greater than the competition that's coming along. And yeah, that's my simple view on it.
Makes sense. Anyone else?
Yeah, no, totally agree that like competition is good, right? Because it does talk about validation. It also does lead us towards that. How do we get to mainstream, right? So I think to answer that question, though, I think the biggest competition does come from the players who are the biggest in TradFi, right? Because if we look at the digital asset space now, we're still very much in infancy in terms of the market structure, right? So we've got exchanges, we've got custodians, we've got guys looking to do prime brokerage and that sort of stuff. All this is like kind of in TradFi, that is bread and butter of like the largest institutions. So they are going to at some point become competitors. And that is not necessarily a bad thing, but they do have balance sheets which far outweigh anyone in crypto, name probably like one of the two exchanges, right? So, I mean, I welcome that. Right? I welcome that.
But I actually think a lot of people think, oh, big TradFi firms coming in, are the natives really worried? I want to just draw a couple of examples, right? Fidelity has been in this space to provide custody for some time now. They're a very big traditional player, and I would love to ask BitGo. I'm sure you guys hold way more customer funds than Fidelity does. Really what it comes down to is product competitiveness. Like, what are you offering to your end customer that allows them to achieve their goals, provide value? Just because you're a big name in traditional finance, if you don't approach this market with the focus of delivering great product for your customer, it doesn't necessarily guarantee you'll be successful. And this is, I think, what I've seen in this market so far is we welcome a lot of traditional players to come into the space because it brings legitimacy, but really what the audience should be focusing on, like, what are they launching as a product? Because even like CME, right, they've launched their product, and you look at how much trading volume is on CME versus like Binance, and the proof is in the pudding itself. So I do think it might bring new players that come into this space. So let's say a traditional asset manager who wouldn't previously were able to work with a digital native player. Now they're able to get access to this asset class, which is net inflow, which is beneficial for the market because the price goes up, right? So I think that's how I look at it. It might bring new players in, but that doesn't generally mean that they're going to be super successful.
Okay, so to paraphrase, competition good, bring it on.
Yeah.
Right? Now, I wanted to end with regulation and Hong Kong. So again, I come from the law and regulation, and I joke now, strangely enough, the lawyers now, I think our next panel has a whole bunch of lawyers because regulation becomes very important as part of the mainstream. So Hong Kong, as was mentioned earlier on, I think just Amy and I are from Hong Kong. The others have all flown in from Singapore. So welcome. We're very happy to have you guys here. We'd love to hear your thoughts on regulatory regimes and directions of countries like jurisdictions like Hong Kong, the type of regulations that are coming forward, and the role that they can play in legitimizing the space. And as an extension to that, do you guys have any plans along those lines, which may or may not involve Hong Kong more? Maybe we'll start with this way around. Sure.
Firstly, I think Hong Kong's position as a global financial center is just undisputed, right? I joke that from when I first came here when I was very young, when you walk the streets of Hong Kong, you can see trading in the blood of people, right? And it's very different. I say that not jokingly. It's literally like the common man in Hong Kong loves trading. It's a city built on trade. And there's only very few cities that are like intrinsically like that. I would argue maybe London and New York, but there's and to an extent Singapore, but Hong Kong is a trading city. And so it's very welcome to see what the government is doing in terms of making measured steps to allow some crypto trading here again, but also harnessing the virtual asset economy. I live in Singapore, and we've been working very closely with Maz, and they've been a great partner. But we need this counterbalance of Singapore and Hong Kong. I think together they push each other forward. There's a third part, which is also Dubai. But in this region, I would say that Singapore and Hong Kong are definitely the most mature, international, open trading centers. And together, I think they're going to push each other's policies forward. And by the way, I think they're not only going to push each other forward in Asia, I think also what's going to happen is a lot of players coming from other regions are going to relocate to Asia because both of them have very forward-looking views. And that's certainly what I shared with the regulators yesterday.
Fantastic. Anyone else want to add to that? Steve?
Yeah, sure. I think that whenever you have regulators trying to get on the front foot and create stable frameworks that will then allow the ecosystem to flourish, that's a good thing. So I tip of the cap to Hong Kong for trying to step up to the plate, because ultimately we're still in the first or second inning of a 9-inning ball game, and as a result, we're not going to really know, especially at the margins, how to fine-tune regulatory regimes unless we try. So I welcome the developments here in Hong Kong, and I do think that a little bit of competitive tension across money centers around the world is a good thing, because again, it just pushes everything forward. With respect to BitGo and our plans, look, being licensed and regulated is in our DNA. We're always evaluating which jurisdictions make sense for us, and currently, we're pursuing licenses in 2 places in APAC. That could conceivably increase over time.
So I actually want to just call out, if you look at the recent paper that the SFC released, the level of their understanding of the technical stack has tremendously improved from the first version when they launched a long time ago. The requirement around operational control is like 5 pages long, right? The requirement around key management and all the different solutions, you can see the regulator have not, they have been studying the industry and really engaged with the various different major players and getting their advice on, how does this solution work, and ultimately the difference between a digital asset platform versus a non-digital in the traditional sense lies in the wallet aspect of things, right? So because you do have to manage these assets, you do have to broadcast to the blockchain. So we're really encouraged to see the regulator being so advanced in a jurisdiction like Hong Kong to be able to give those guidances to the applicants to enable them and encourage them to put in a level that is maybe above and beyond than the rest of the other regions. So we're really encouraged by that. Our role have always been to support our licensed customers to enable them to become licensed entities, given we're a tech platform. So a lot of the work we've been doing in the last 2-3 months has been sitting with our clients to see and support them on their journey to get the licenses.
Fantastic. Any last words from you, Andrew? We talked a bit about some people are more regulated than others, right? So I think any thoughts?
Yeah, I mean, to that point, similarly, like for us at Ledger, it's about supporting our customers who are regulated. So what everyone has said, I agree with. I very much welcome Hong Kong and its regulations. When you have one of the world's global financial center regulators getting involved in the space, that does provide competition. Back to my earlier point on the previous question, this is part of the ecosystem as well as part of market structure. Regulations are part of market structure to once again get things to that mainstream participation, right? We're not going to get there if there aren't sort of rules and regulations. And that is the fact, right? So definitely welcome the Hong Kong regulators. For us at Ledger, it's about supporting our customers and making sure we're able to facilitate them and what they need to do on their sort of licensing journey.
Fantastic. So I moved to Hong Kong from New York because of the capital markets here in Hong Kong. As you said, it's a premier capital market center. I was also born in Singapore, so I always declare that. So I agree with that nice competition. Exactly. But it's a good competition, right? It's a race to the top. And I encourage all of you. The SFC consultation is due this Friday. After this panel, I'm going back to review this FinTech Association submission that we're going to do, right? So again, this is an opportunity for us to all grow the ecosystem together. Can you please put your hands together for this wonderful panel and their time in the sharing here? Thank you very much, all of you.
Thank you.
Thank you.